Good morning. It's Tuesday, and we're back with another edition of Tredomatix Daily Financial News, where we break down the markets and offer essential insights to keep you informed. Don't forget to subscribe and visit Tredomatix.com for the latest market updates and more. Wall Street's three major indexes ended Monday with a decline of around 1%, as traders pulled back on their expectations for a Federal Reserve interest rate cut. The ongoing conflict in the Middle East is contributing to rising oil prices, which is causing additional concern among investors. With quarterly earnings season just around the corner and fresh economic data on the horizon, the market is in a holding pattern. Big names like Alphabet and Amazon were hit hard, with Alphabet losing 2.5% after a judge's ruling required a revamp of their mobile app business. Meanwhile, Amazon fell 3% following a Wells Fargo downgrade. Insurance stocks were battered as Hurricane Milton intensified into a Category 4 storm, causing market jitters. This year's devastating hurricane season is adding billions in potential claims, further shaking investor confidence in the insurance sector. Major players like Heritage Insurance dropped 25%, while Universal Insurance plummeted 18%. The mounting catastrophe-related claims are putting significant pressure on the insurance industry, with the sector's long-term outlook looking increasingly uncertain due to the escalating frequency and severity of natural disasters. The U.S. dollar is holding strong after hitting a 7-week high, thanks to last week's surprisingly strong U.S. jobs report. Traders have reduced their expectations for significant rate cuts from the Federal Reserve, which is keeping the dollar in a dominant position against major currencies like the euro, sterling, and yen. Although the yen saw a slight recovery due to safe haven flows sparked by the ongoing conflict in the Middle East, the dollar's continued strength is making it a favored asset among investors seeking stability in a turbulent global economy. Oil prices surged over 3% on Monday, driven by fears of supply disruptions from the escalating Middle East conflict. However, some profit-taking saw prices pull back slightly today, with Brent crude down 1.5% and WTI down 1.6%. Despite this pullback, market analysts warn that the ongoing geopolitical risks may keep prices elevated in the near term. Investors are closely watching for developments in the region, particularly concerning potential impacts on oil supply lines. Gold prices edged lower today, pressured by a stronger dollar and rising U.S. Treasury yields. Spot gold dropped 0.2%, while silver and platinum also saw declines. Despite this, gold remains a favored asset in times of uncertainty, and the escalating geopolitical tensions could drive renewed interest in safe haven assets. As investors await key economic data, including U.S. inflation reports later this week, the broader outlook for gold may hinge on how the Federal Reserve adjusts its rate cut expectations in response to global events. Thanks for joining us today. If today's news was valuable to you, don't forget to like, share, and subscribe to stay ahead of market trends. Come back tomorrow for more detailed analysis from the world of finance. Happy trading!